it's like kind of hilarious because like this does not matter at all. And somehow everyone seems to miss the joke, right? Which is Elon's just doing shit to stay in the news cycle, right?
Elon, just like us,
Just like us, just at a ridiculous scale.
Greetings. Hey guys, how are you doing? We're down a musketeer, Dave. I only see your beautiful face.
I know. I'm just not the same beauty.
Well, hello to all our listeners out there. Welcome to this week's More or Less, the podcast where we go behind the headlines and go behind the things that should be headlines but actually aren't yet. They're that secret. So we are thrilled to be here with you once again. I'm Jessica Lesson, the founder of The Information, and half of the Less camp here with my husband, Sam Lesson, who I feel obligated to say has published a book in the last week. Sam, would you like to promote your book?
Yeah, if you like my screenshot essays, but don't like that they're screenshot essays, you can pay me $9.99 and have them in Amazon form.
Sam, you're a creator now.
Look, I always love doing these things. You learn so much. Amazon's fucking brilliant. I love how they set up the.
How hard was that?
Well, here's the thing: incredibly easy. I mean, I've done this before. I did a bunch
hard to get paid. I
did a bunch of quote unquote books, like whatever it was, 4 or 5 years ago. With the this is pretty easy. You just drop notes in and it makes a book. And I will say, good use of AI. My old problem was cover art. No problem, right? Just that's a perfect use for AI. What?
Did you include like new art? Is there art with every essay, or
no,
is it just the essay?
I'm not going to spend time on that. Just the cover, I put in just like modern. I did like scientists, modest proposals, science fiction.
Okay, this is technically where I'm introducing you. So Sam Lesson, who wrote a book, who also learned. Do you want to get to the point about how hard it is to get paid?
Amazing.
Yes. Okay.
Love Amazon. So they make it impossible to charge anything between like $10 and $30 for a book. It's hilarious because the way it's set up is you can set it up so you get like 70% of the money up to $10. But then after that, you have to get 30% of the money. So effectively, they make it completely irrational to price anything between like $10 and $30, wherever the numbers end up being, which is completely hilarious. It's also very funny that everyone gives everyone shit for 30% take rates, and Amazon is taking 70% on Kindle sales.
That's wild.
That's pretty wild. Also, a reminder, you can't buy this thing on your phone. You got to go, it's a pain, but you should do it anyway. Title, Modest Proposals. Is that?
You don't have to. Just buy it if you don't like to read screenshots, because I'm sick of hearing from you.
This is what do you call that? It's like I'm not even going to think about it, but I can't think of the word, but it's a delightful read. Give it 4 to 5 to 6, however many stars the Kindle rating system goes up to. And to round out our crew this week, we've got Mr. Dave Morin, who I was learning is a very good public equities picker. And we're not going to make him reveal his portfolio here, but we were, catching up as one does, talking about our stock portfolios, of which I do not have one. And anyway, very impressive, Dave. You got a nose for this stuff.
Well, I do it somewhat professionally on the private side. So
yes.
I guess that's the whole thing, is like, how good is somebody on public and private?
Yeah. So Dave Morin, crossover investor extraordinaire. And, I was going to say, Britt's probably starting her 19th business right now, because that is always
she's
what
at a board
doing.
Meeting. She's at the Life 360 board meeting.
Occasionally we go to board meetings, but I think we try to winnow those down.
I don't think I'm on any boards anymore. Am I on any boards?
I don't believe you are. No.
Thank God.
Thank God. It gives us more time to discuss what really matters, which are the headlines and the news. And, I spent a fair amount of time trying to pick a focus for this week's episode, and I failed. So we are going to serve, I think, a trifecta of topics here. Because there's a lot happening. And I feel like we must discuss all things X. And I believe we have maybe a contrarian take on that. But the rebranding of Twitter, you would think that like we had landed on Mars based on the coverage of this thing and the digital journalism press. But that aside, it is not another important moment in X's / Twitter's history.
Or not.
Or not. Okay. Well, we can cross that one off. No. We're also going to talk a little bit about a company I think we have overlooked on the pod so far, which is the Google. I still refer to it as that, otherwise known as Alphabet. Big week, new president of Google, a title not held since Sergey Brin had it. But like, what's going on there? What we think of the company, what we're hearing, we're going to dig into it a little bit. We're going to wrap up with, to all our investors out there or investors who love the pod, and we love you all too. Sam has put out this provocation in the world that seed investing is dead. And obviously it's a time of real change in the industry, but I think we're going to get into debating that a little bit and really what's ahead. And is this just the down part of a cycle or something bigger? So let's start with X. Sam, your take on the rebranding of the Bluebird.
I mean, I think Dave and I, we talked about this before, we agree on this. It's like kind of hilarious because like this does not matter at all. And somehow everyone seems to miss the joke, right? Which is Elon's just doing shit to stay in the news cycle, right? And so,
the guy is just the grand master of this.
So you think he's sitting there being like, oh, more articles, please. Do more crazy things. And I'm going to watch my $47 billion investment wither.
I don't think I know. I don't know him well enough to know how much is just like the Kanye style natural to who he is versus like engineered. But I think he's just like doing shit to stay in the cycle and relevant. And look, I do think it's very funny at the scale he's at and this whole thing is at, to be like, oh, it literally felt like he's like, oh shit, I have this like X.com thing on GoDaddy. I'm gonna like go into the dashboard and change the DNS record. And I'm like, oh shit, I forgot to update the MX records, and now I'm
impressed that he didn't expire. There's a whole period of the history where I just accidentally let these things expire, including the information.com. So
well, look, he's obviously a bajillion times better known than us and any of us, and more successful, at least richer. But that aside, it's like these guys are just guys, and they literally just have like domain names like we all do, and they're just going in and changing records. And the funniest part being that he screwed up the MX records. I obviously think
really? I didn't hear that. The MX records?
And it just broke Twitter because he like didn't change the mailing records. And it's like, I've done that. We've all done that.
So
right?
Totally.
Elon, just like us,
just like us, just at a ridiculous scale. I mean, I think. But it's like, I don't know. I think like, look, when the press is and everyone is like hemming on, I bet money engagement was way up on Twitter.
Yeah. People
debating X on Twitter. So like, again, if that's his goal, he's doing a good job at it. It just seems like a complete nothing burger beyond that.
Well, that reminds me, I always felt when, the information we didn't sort of cover President or candidate Trump sort of, really much compared to other outlets, but I always felt like they face this really challenging dilemma, which is how much do you cover someone who just wants to be covered for publicity and is just saying things for publicity. And then Elon kind of started his current phase with Twitter, and it sort of stirred up for me exactly the same dilemma, which is like, you sort of can't not write about it, but you're playing into it at some level. And so I don't know, Dave, what do you think? Like, does he have a grand plan at this point?
Incentives drive behavior, or chosen incentives, right? And my favorite framework for thinking about this is what I call the WWF framework for public engagement. And, in the WWF, you have either people who have chosen to be a heel or people who have chosen to be a face. And the KPI of a heel is booze.
Wait, you're going to have to unpack that a little bit for me. I'm not familiar as much with this framework.
Yeah, it's in the WWF, you either or are a character that you go out on the stage and you talk smack to the ref, you break chairs, you break the rules. You're kind of your entire KPI is to get booze rather than getting cheers.
I see, booze.
Right. And then on the other hand, if you're a face, your goal is to get cheers, and cheers are usually brought to you by, technical competence, being excellent. It's like, Tom Brady is the ultimate sort of, what I would think of as like a face, and you can go through like the history of the WWF or MMA or any of this stuff. And people take on these characters, or the crowd decides which character that they want. And I think Elon largely started off as a face, but somewhere along the way became a heel and became extremely good at it. And this is the same goes with Trump, same goes with Kanye. You can kind of break down musicians into this. Anybody who's engaged in the public debate, and you can kind of really break it down into these two, one side or the other. And there's different ways you can get boos, there's different ways you can get cheers. But Elon just continually does this stuff that gets boos. And, I think Sam, I think we were all at that Dave Chappelle show in San Francisco, which Dave Chappelle is like a classic face. He's an extraordinary comedian that just like keeps people laughing the entire time. And it was amazing, actually, the minute Elon got on stage, the entire stadium filled with boos for not just like 30 seconds, it was like 5 straight minutes. And to me, it was like a very physical manifestation of this, feeling that feeling in person was like exactly what's going on right now. And people just keep falling for it. He seems to have a real knack for it. So is he sitting there going like, is this what I should do? I don't know. But I do think that his narrative and character has taken on this shape. And once you're in that shape, that's what the crowd wants. That's what you're going to give them. And,
and
here's
so what does
another
it mean
one.
for the business? I mean, again, we've spent the last couple of weeks being like, hey, Twitter isn't going to go away, even though Threads is interesting. We don't need to come back to Threads every episode, but obviously, engagement there has not held up. But like, what does this mean? What do you guys think will happen for the business? I mean, again, he's still. I am
beginning to wonder: is this one big troll? I mean, for real, like it is. This does feel like a moment where there are like moves you can make that are more heel-like, but this is a big one, and it does destroy a lot of brand value. He does seem to have a real interest in the letter X for some reason. It's in all of his SpaceX, Model X. It's just like
his kids' names too, right? I mean, I can't remember.
So maybe it's just he really loves the letter. I don't know, but it does destroy a lot of brand value. It does feel like, I guess here's one other thing I'll say. My favorite genre of posts on the internet this week is former Twitter people complaining about how Elon is ruining Twitter. And my kind of internal response to this was like, no, Twitter ruined Twitter and then sold it to Elon. And now Elon can do whatever he wants. As somebody who's sold a social media system to another company that then went and did whatever it wanted with it, it's the price you pay, execute better next time.
I mean, let's remember, he didn't want to buy it. He was suing tonight. But okay, so we basically think it's important to remember he is just in it for the attention. Every next move should be seen through that lens.
I mean,
maybe not the attention. It's more that's the character now. Go ahead.
Look, I actually think he really does think he's going to build the meta app of the Western world.
For sure, I believe that too.
I think he thinks that.
Yeah.
I think any thinking person who's worked on the internet would take the massive under on that, right? In terms of that being the outcome.
Yeah.
I think that's extremely nearly impossible from the position he's currently in. But I think in the meantime, it's like he has a fun race car that he spent $44 billion on. He's going to kind of do what he wants with it. And like, the funny thing is like, look, it depends how you look at these things. On one hand, you're like, okay, $44 billion, that seems like a huge amount of money and noteworthy, and we can all like laugh about it. On the other hand, it's actually not that much money for him.
It's caused a lot of headaches. He's had to leverage stock.
Headaches, that's almost the point. It's like, if you've incurred all the headaches already, you might as well have fun with it, right? And the reality, it's kind of a sunk cost.
Yeah, that's kind of my point on the trolls. It's like, this is just fun.
Is Elon having fun?
I don't know if he's having fun. I mean,
he seems to enjoy the process. Right now, I do think he seems to enjoy the process of being the nuts and bolts of building these, the entrepreneurial journey. You have to give him credit for that, right? The guy's like an extraordinary entrepreneur.
And look, at the end of the day, how much is it really going to cost him? Like, how much equity do you put in? Like $12 billion or something in personal equity? Is that about
something
right?
like that. Yep.
Fine. So he's going to get 6 back of that in a tax write-off. So it really only costs him $6 billion, right?
But
and
also
the reality
his time. I mean, I know the guy doesn't
I
sleep, and I
know.
know he's on the factory floor, but he got shit to do. He's got to get the Starship off the launch pad and
Look, I
stay
think
off
it's
the
a-
launch
it's-
pad. He's got,
I'm with you. I just think
I know
they
it got
gotta
off the launch pad. It just has to stay off.
Barely.
Let's pretend Twitter goes to zero. Let's pretend it goes to zero, which who knows? I bet it does, and I bet some PE firm buys
It's
it.
not going to go to zero.
But like the maximum it's going to cost him in actual like money is like maybe $3-4 billion personally, maybe
So what
5.
what are you saying, Sam? You're
Who
saying this
cares?
is totally rational. Who cares? I mean, you're on Twitter. Like, don't you care about the fate of the service?
It is kind of rational. You know, I've been watching Downey's Dream Cars on Max, which is this great show where Robert Downey Jr. like takes all of his cars that he's built over the years and turns them electric.
It was the latest and new kid YouTube creator trend.
No,
you're going to educate me about.
It's a great show that, you know, he takes all of his car collection and he turns it electric. And how is this any different, right? Like, you know, I mean, he's collecting things that he likes and working on them and, you know, hot rodding them and changing them around and, you know, who knows?
I just think it's like, my basic view is like, this is a whole fucked up weird situation in culture and history. He ends up in this position. He's sunk costs. He's stuck with it, right? And when the dust settles and he loses and has to write it off personally and gets $6 billion in tax credits back and pays $6 billion in equity that he lost, you know, that's 3% of his wealth, right? That's like, I can promise you, and Jess confirmed this, that I have wasted 3% of my wealth on several things, right? And like,
this is accurate.
I'm sure Dave has too, right? I'm just like doing the math. It's like, yeah,
absolutely.
So like, I just think if, you know, the easy way to look at it is like, oh my God, value destruction, all that stuff. But the other way to look at it is like, look, he got stuck with an asset. He's kind of being a dick about it. He's screwing around. It's kind of going to zero. But it's not going to go completely to zero.
And then just to bring it back to the business before we move on. So we think as an influential platform in society, in the world, in a business, it just sort of withers. It just kind of meh.
Doesn't seem like that's what's happening. I mean, it seems like they're actually trying to make a go of it. But whether it, I think Sam said this several times, like, does it wither to zero? Like, I don't know.
I think we'll still be using Twitter. I just don't think I think it's a kneecap.
I mean, why would advertise? I mean, I guess if people are using it, right? And so then
just eyeballs.
I will tell you this. I'll tell you something funny, Jess. You're probably not going to like me saying this on air, but you know, we're trying to be flippy here. Is I actually got a hilarious fucking ad on Twitter the other day that talks about who's actually advertising on Twitter at this point. I was scrolling through.
Tell us. Yeah.
I was scrolling through, and have you ever heard of a website called Seeking Arrangements?
No. What is it?
Do enlighten us.
Awful. And it has rebranded itself Arrangements. It's still Seeking Arrangements. And it's advertising on Twitter. That's the quality. It's basically, for anyone who knows what it is, it's like as skeezy as the internet gets. And they are now advertising on Twitter. Like, that is who's buying ads on Twitter.
Well, but does that make you want to like advertise on Twitter? No. Or be on Twitter, right?
Wait, look, in the end of the day,
wait, is it a porn site, Sam?
No, Seeking Arrangements is this famous.
I'm not going to the website because I think
Don't
that would
go to
be a
the website.
disaster.
You'll get cookied.
I've never even heard of it.
This is a website that was started by some MIT kids for wealthy men dating hot women and making matches. And like, you basically apply as a hot woman or a wealthy guy. And I was just shocked. I was like, what, arrangements? I was like, oh my God, this is the Joe Green seekingarrangements.com website. And like, that's now what's getting at. That's who's won the auction in Twitter.
Wild.
Okay. Moving on. So let us, we devolve to the same place. I don't want to say too often. That's judgmental, but.
Well, the internet is for porn. So
I thought you were going to make an X joke, but you didn't. But then I gave it to you. So here we are.
It is what it is.
Okay. So let's talk about Google for a second. So I got to say, I'm very fond of following this company. It was my first real beat at the Wall Street Journal way back when. Still remember the day I got to tour the Mountain View campus and meet the 77 PR people who wanted to talk to me back then. I know, we're missing Britt, so we got to channel her. But obviously such an important, interesting company. Like, big question whether it's lost its way in being slow with AI, right? OpenAI came out swinging, got a lot of investor questions, internal sort of mayhem over the strategy. have announced a new strategy, integrating its different groups. It seems like maybe Sundar's gotten some of his mojo back. Investors seem less agitated. And then this week, we hear that Ruth Porat, the CFO, has been promoted to president and chief strategy officer, which, in a typical sort of maybe seems normal, but I feel like feels very not normal for Google. Like, this has not been a place that, has had people in that role. Ruth, who had been at Morgan Stanley before, sort of came in as the Wall Street person. And I'm, deeply sort of curious in why this is happening, if it's so significant. And like more broadly, how are they going to emerge on the AI stage? And like, is their strategy going to work? Are they going to end up just cannibalizing their cash cow and game over? So I want to know what you guys think. Sam, you kind of know Ruth. Do you want to get into that?
Well, no would be strong, but when she was like an associate at Morgan Stanley, she I think worked on my dad's teams back in the day. So she, when I was a little kid, came over to our house a bunch. And her brother, Mark Porat, founded General Magic, which became which then became like the Android thing. So there's probably a secret horror story of like the Porat family circling around Google since the early days, given the brother-sister connections in there over
Wasn't
time.
General Magic even located in one of the Google buildings in the old days?
Maybe. I mean, when General Magic went public, my dad was so excited about it. He pulled me out of school to go to the analyst briefings at Morgan Stanley. Or maybe it was Smith Barney, one of the two. I don't actually know. But, either way. And yeah, I got to ask one of the first questions on that call about privacy. And he was over the moon about that pre-internet company. But, it's pretty cool history that then became the Android team.
The rest is history.
Largely. The rest is history.
Yeah, I mean, General Magic had such a extraordinary history, actually, the number of people. But back to Ruth and this question, Jess.
Dave, and how does Google show up, do you think, in Silicon Valley right now among the people you're talking to and all of that?
Well, okay, how do they show up? We just did offline. We just did a deal. An AI.
You did a deal?
Yeah.
Wow.
We did an AI-related deal.
The one of the quarter.
Wait, a seed deal got done in Silicon Valley. Oh, it was AI. Sorry, of course.
Well, it's sort of AI. It has an AI component, and they actually have a AI-specific fund, which I wasn't aware of actually until I saw this deal moving across the line, and they came into that. And they offer compute resources to AI companies that need access to compute. As well as capital. And this isn't the normal GV team. It's a different team called Gradient.
Because there's 77, Google investing
Gradient
teams.
The other thing I would say is that I'm actually finding myself using Bard more and more. Just the product guy in me is kind of optimistic here on this front. I think it's you can't take away from the fact that Google and the Transformers paper and work around that ignited this revolution that we're sort of experiencing with AI right now. And whether AI or not, as we discussed last episode, there is going to be a lot of work being done around this over the next many years. And these guys are, ground zero, right? And I'm finding myself just using the product more every day. I'm definitely using Bard.
But
I would
are
say
you using
2x
it instead
more.
of search? Because that's not good.
Yeah, I am. I really love the new mobile app. The Google mobile app has Bard integrated. And
does it? Their search app?
Yeah, and it's really good. The interface is really nice. It's arguably the best AI search interface out there right now. And I'm really liking it. And that's just coming as a product user.
So you love Bard too. You use it all the time.
I did love Bard. And then I realized I love Bard's confidence, but his accuracy is not so good.
Yeah. Which I think that's the thing impacting all of this though, right?
Yes,
We're all kind
totally.
of the accuracy, what? But the thing about Bard is it can interpret the real-time internet. It gives you sources. It's pretty extraordinary when you're doing things where
interpret the real-time internet because it is most likely flouting copyright, which is going to come back to bite it too. But they're very interesting. I go up and down on it. I definitely use it. I think like using it to research things where I don't know the answer to, I end up confirming it with Google. So like that doesn't tremendously help. I think they've done, I tend to fall in the camp of like, they can be fast followers on a lot of this stuff, but I think there's more internal turmoil than meets the eye. And that's in part why I think Ruth's promotion is interesting. I think like it's very classic when things are going well, 1,000 flowers bloom, there's not a lot of focus. And
isn't that happening across all of big tech, though? Just to kind of push on that. I mean, you've got
definitely
all of big tech's done a bunch of layoffs using a bunch of pretty random frameworks to do so. Some people used merit, other people didn't. Seems like Google actually took out a lot of really talented engineers using a framework that was kind of counter to its culture. And so, but like I'm hearing this across the board, Google, Apple, Meta, everybody's got this stuff.
Of course. But then when you're growing 7%, right, which they are in terms of their revenue and not 20 or 30. And, at the same time, like it becomes really challenging. We had at the Information a very serious piece about mental health at Google following 3 suicides of employees and a bunch of other issues that have really led to a lot of difficulty for a lot of employees there. And I don't think we didn't write that piece because we think that Google is, the only company.
Yeah, that was my response to that piece. I was excited, or I wasn't excited, but I was happy to see kind of a difficult mental health piece being written. But my question was, these numbers have to exist across all of the big tech companies, right? So like,
maybe.
Where are
the
they?
Suicides, again, so 2 of the 3 that we talked about had already been public. But that does not appear to be happening at other big tech companies. But again, the point isn't that they're unusual here, but they are an important kind of microcosm. So I don't know. I think it's going to be fascinating to really watch. And like, they have a lot of competition. And then, right, Dave, for every search you do through Bard, Google gets paid $0 probably currently, right?
Today.
Yeah. But even like, what is the model? You're not going to want out of that experience, like 10 ads to click on, and they're not going to trick you into, clicking on something. So I think it's an existential moment. What do you think, Sam?
I've stopped using Bard and OpenAI as a consumer. Like, I think they're cool tech, and I think they're a cool place to apply the tech. But I don't, I think that was kind of a nice brief moment. And maybe when school kids come back, they'll start using it to cheat again. That's fine. But like, I think either of them is like, there yet. I could imagine interfaces or futures that might get there. Yeah, look, I feel like what you see now is this thing that in the distant future, ad model, the way people get paid for directing them around the internet and risk streaming will have to change in some way, shape, or form. And, whether that's a rift that someone can take advantage of and hurt Google, I'm not sure. I think Google seems to be very well positioned in all of this. But I'm sure there'll be some turmoil. There will be, if anything, I feel like, if just use simple models, like, imagine, the internet has been for a long time, and Google and Facebook and all these guys on like a pretty nice clip upward trajectory. It's like anything else. It's like it's cresting at the top.
Yeah.
They're not growing so fast. Like, there's going to be a moment, and then where the ball goes from there, it can go anywhere once there's not like a clear, direction and velocity to the move. So I don't know. It just feels like one of those moments where things are drifting around. They could go in different directions, but it's not clear to me that Google's in a terrible place. I certainly spend a lot of time on their products.
It is notable that her portfolio includes the Other Bets portfolio, which that's an interesting. Putting the CFO in charge of the innovation group is kind of an interesting signal.
That Ruth's track record to date has largely been pruning those. Larry created Alphabet because, he wanted a way to retain all these great people who wanted to go off and do fun projects, like Andy Rubin, who didn't, want to work on the core. And Larry wanted to go work on these projects. So he kind of spun them all up, and Ruth has been systematically shutting them down and centralizing their operations. But, her impact as a leader, I think, has been clear through that work. But when you look on the impact she's had overall at the culture of Google and as the company, I don't know, like not a lot jumps out at me. And I believe that HR used to report into her and doesn't anymore. And so I'm curious to see what in this president role, like maybe it's just, she wanted to leave and they gave her a bigger job, right? That would not be the first time this happened in the history of business. But I think it feels like the kind of move that's trying to stabilize something. And yeah, in that respect, I think it's pretty interesting. So
I'm always curious, and this is like a very personal, like, if you're Ruth, and again, why would you want that job? Like, she's made plenty of money, right? She's had plenty of impact. Like,
Sam, there isn't like a job that exists in the world that you want. So I think that you're kind of a challenged person to make that point. Although it is a fair point. It looks
kind of like a Secretary of State job to me too. Like it's both. It feels like make sure that you reduce the other bets even further. It almost looks like finish the chop job, like get rid of all of these other bets that are just a waste of our time and energy. And then like go be Secretary of State. Like a lot of the rest of the job description in the press release is like policy, external, emissary kind of stuff.
I mean, I imagine like Sundar, who last I checked had more direct reports than anyone except Elon Musk in the information org charts, except maybe, no, there's one other, NVIDIA, it's like 45 or something.
The fully flat org, everyone reports to the CEO.
Yeah. So I guess like I see the rationale for freeing up Sundar in theory, but you don't free up the CEO of a company as big as Alphabet to do more things. But it's kind of intriguing. Also, it should be said, she is really one of a very small number of high profile female executives in the Valley who are in the role and very active.
So can I ask, I think part of the story here, and I'm curious what you guys think about this, is like, you talk about even like Google's talent hoarding over the years and their willingness to do weird shit, pay people too much money and let them work on whatever they want just to retain talent. I actually think the real story is, with the exception of some people that are very hyped up about AI talent, specifically in a very narrow sense, it just turns out that like hoarding talent isn't really that good an idea, because like they don't work that hard or produce that much, right? And so it's like one of those things where I think maybe part of the story in Google cutting and like a lot of these cuts in this moment or whatever is like, we went through a generation where a whole bunch of people in Silicon Valley got super rich resting investing because there was this theory that they were so valuable they shouldn't be let out into the ecosystem, or like whatever they did would be amazing. And it turns out that like, the era of innovation in most of these companies is long over, right? You do need some great people to do the innovation, but most of like the line engineers and people who just kind of like, show up in 9 to 5 and crunch out small projects, they're just not that valuable, and you're better off cutting them rather than doing whatever you possibly can to retain them.
And the ecosystem's definitely better off if we could have smaller teams doing more innovation too.
Which again, AI should actually, in rare case, help with, right? So I guess like for me, that's kind of the thing I could imagine that's happening at Google and a lot of places is everyone saying secretly like, oh shit, you know what? We just like did this weird talent hoarding thing, and we're willing to do projects that made no sense, and people didn't work that hard, and they did all these weird bets. It turns out that was like a huge waste of money. And
I liked what Gary Tan was saying yesterday. I think he was tweeting about that the Apple Calendar app and how bad it is proof of this. That like, even though you have $1 trillion or multi-trillion-dollar market cap and infinite resources, like, your calendar app should be good.
Yeah, and so I don't know. For me, it's like
I think that shift is happening. I wonder, like, how much. I mean, from a financial point of view, you would just say if you're growing at 30% a year, you can support behavior that you can't support if you're growing 7% a year. So I wonder how much is like tied to this economic moment versus a deep lesson the company's learned. I think they should learn the lesson. I think it's the right lesson to learn.
I mean, but I think
time will
they
tell.
could have been growing at 30% without spending so much money on wasting so much money, right? It's just like, I guess it just didn't matter when the market only valued growth and didn't really care what people were spending. And like, I just think it's like much healthier. right? So
well,
the
we'll
cloud
see.
growth
And
number is pretty wild. I mean, is the cloud growth is like 28%. I mean, it's crazy. Actually,
cloud is growing. It's still nowhere. It's not gaining market share, which I don't know how much that really matters. But it and they've set all sorts of goals around that they're nowhere close to meeting. So, but it is growing, and that's a big question. Okay, let's move to our third and final topic for the day: seed investing. I'm the only non-seed investor currently present. Although actually, I am a seed investor.
You're just always surrounded.
Shout
by
out to my
investors.
portfolio. Sam, you consistently said, but kind of continue to ratchet up your rhetoric on saying we're not just at a trough in the cycle. VC's fundamentally changed. It's the end of the VC epoch, a topic we've covered here. And you think specifically seed investing is dead. So why don't you summarize your argument, and then we'll sound off and make it today's debate topic.
Well, I mean, the thing I've been saying for a long time is you just have to think about, effectively Silicon Valley from a capital perspective as a factory floor, right? Shit comes in the first people to touch the product and start making as the seed investors. You pass it to the A investors to do the next step, and then the B and the C and the D, and then eventually pop it out the back of the factory to the public market, and everyone gets paid, right? And that,
or you sell it.
Or you sell it.
Yeah, either way, everyone gets paid.
But either way, you kind of pop it and someone's buying it. And the reality is like this became extremely cookie cutter in the last decade, right? And I think like the part of it is like the YC thing, where like YC had like a playbook, right? And they're like, here's the playbook on how to do venture capital and deal, pitch to VCs and then get on your little factory line and make your company successful. I think like there became very clear metrics that everyone understood from seed to A and A to B and blah, blah, blah. It was very cookie cutter. You knew what things were worth. It was easy. What happened obviously is that the public appetite for things that lost a bunch of money but grew went to zero, right? In the last year or so. And that kind of backed up the factory. You ended up with all these pieces of almost finished product, right? Companies like down the line that were way overvalued and couldn't get off the factory line and started expiring. All the people who were working on these late stage things all of a sudden were underwater and didn't want to have more raw parts come in the front from the seed guys or from the A guys.
How much of that was because the model broke versus the economy breaking?
Well, I think the entire model was built around a version of the economy that wanted a bunch of effectively pretty standardized call it $5 to $15 billion IPOs that were tech companies that fit into a model. And so like it was just like we were just delivering them the parts they wanted to tell that story. And when the economy shifted, right, and the demand for those things dried up, the whole factory is just completely backed up. And I think the question was, how do you unstick the factory line? And I think that's this is not an original way to frame it. I think, I'd like to think I was one of the first people to frame it this way.
Not original? Come on.
Well, it was original to me, but like, I'm not sure at this point.
I was going to say, this is just economics.
It's like next time Bloomberg breaks a story we're chasing, I'd be like, but it was original to the information.
I mean,
They never break a story.
I mean, some people might debate me on this. I don't think it's that debatable what has gone on. And what I think the question is well, when do you get the factory line running again, right? Like when does it get back? When do you work through the inventory? When is you ready for new seed deals and new pricing for Series A comes out and all that stuff? And my answer has gone from 18 months, 12 months ago I said 18 months. Now I'm like maybe never.
What changed? What have you seen? Yeah, besides your unabiding love for all things AI, what is that was a joke.
Yeah, I mean, Sam, when we were skiing a couple months ago, we had a conversation about what the Fed was doing and what's going to happen once we get through this regime of whatever the Fed's going to do and we get back to a quantitative easing or whatever we're going to call it in the future. Obviously, we're not going to go back to the prior regime. But there will be some pressure, removed from the system. We'll move back towards an inflationary environment. Like something will happen when that happens.
So this is a longer conversation. My basic view is that there was a brief moment where people were excited about these kind of growth stories, specifically coming from tech, and people were willing to give people the benefit of the doubt of profitability someday and down the line, And I think what's happened is we've seen that the winners in tech are obvious winners. The Facebook, the Googles, the Amazons, whatever. They're just like crushingly large. They're in a different, literally universe than all the other stuff that VC is churning out, right? So obviously, if you can get invest in the stuff that's going to be in the different universe, go for it. And every once in a generation, you'll have those. But I think the entire seed through late stage capital markets the last 10 years organized themselves around the premise that you could kind of churn out unicorns, right, at some predictable clip that would be valuable. And I think what you realize is you churned out a bunch of companies that are worth less than capital invested, that are unable to ever make a profit or never will, or going to get stuck on people's books. And even on a more personal level, I think if you're an entrepreneur, you're seeing this too. And, as I've pointed out many times, it's like, if you had a business you own and operate that does 50 million top line with 30% margins, you're fucking psyched.
Totally.
Right? That's a great, if you have a venture-backed company that does that, you are screwed. Right?
Yeah.
Like you're never going to get liquidity. There's no market for it. So I think even in terms, I think with the demonstration of what non-iconic tech companies can do, is there a model that churns these out? I think has proven pretty clearly to be false.
What about it just becomes a less good business? What about it exists? What about sort of seed investing or this kind of venture investing just becomes a less good business, but it's still good?
Oh, to be clear, what I've said when I say seed investing is dead and the whole, I don't actually mean that like no one's writing seed checks ever. I think people will write seed checks. I just think that the businesses, instead of it being we're going to write a seed check for 18 to 24 months to get you the metrics and the proof points to go get a Series A. And once you're in the Series A, you're going to get the Series B. And then maybe that's going to go away. Instead, it's going to be, hey, you want to start a company? That's sweet. Here's a seed check. It's probably going to be pretty expensive. I'm willing as a seed investor to hold that company forever, and I'm going to be psyched because it's profitable. It's like using the platforms that exist in leverage. It can get really big now. It like doesn't need a bajillion expensive engineers.
But wait,
right?
why would you want to hold it forever? Your dividend, like how are you getting paid?
I think as a seed investor, you have to be comfortable. The business is a good business that is going to work on its own without the pipeline behind it effectively. Yeah. And then guess what? Because tech platforms are sweet and a frictionless economy is sweet, those things actually can sometimes grow super fast. And the winners might actually still get public, but they'll go public as super profitable, fast-growing companies that make sense, not as money losers with too many engineers that are too expensive that have been financed by 6 rounds of private capital.
Yeah. And like, here's another thing. In our back channel, we were talking about this on the more or less back channel on WhatsApp. And somebody said something similar to what the way I've been thinking about it today in the modern epoch, which is, we're writing checks to a lot of folks who are second-time founders, third-time founders that are going to take the knowledge that they've gained through the School of Hard Knocks and going after areas of the economy that are difficult, like Sam's saying, real businesses to be built, real innovation. We're not doing as much of it. Some people are doing defense stuff. There's hard, big, heavy industry. Sam, you and I did a lot of stuff around rockets and satellites and, drones. I did zipline years ago, which all are in this realm of weird ideas that have, not a lot of people interested in them, right? And this was like my whole thing during this entire 2010s era. And Sam, you and I spent a lot of this time together investing that, in that whole era, we were doing a lot of pretty weird stuff. Even though there were a lot of people doing what you're describing, there was a lot of SaaS factory investing going on, right? But my point of view was always like, you need to be in areas that are completely non-consensus, that are, super weird. People think they're strange, stigmatized, and this comes back to, way early in my career conversations that I had with Steve Jobs around how to think about where to spend your time and what to think about, like just be in radically weird places, talking to people about technology, trying to figure out where not just one technology, but maybe multiple weird technologies are intersecting, and being willing to be the funder of that world. That was what investing was. I mean, Sam, I think I remember in like 2017 walking into a partner meeting with you, and I think I was bemoaning like, whatever happened to venture capital? You know, we live in a world of capital these days, and there's no more venture left, right? And when you go read the original books about venture capital, like the word venture came from guys that were literally calling it, I think Arthur Rock was calling it adventure capital in the very
Actually,
beginning.
you know where adventure capital first shows up? I'm actually, this is part of
is
the
it
value
that
of my
book you
college
love?
education. No, Communist Manifesto.
Really?
Marx goes on, Marx goes on and on about the adventure capitalists and how the adventure capitalist.
Oh, wow.
At least that's the first place historically I ever saw it.
Yeah, and maybe that was where it came from. But I do know if you read that, there's a great book. I'm forgetting what it's called. It's about venture capital. It came out a couple of years ago. Very well written, but it details this.
We'll put it in the show
started,
notes. We'll put it in the show notes.
Yeah, it all started with this. That's where the word venture came from. And Sam, you and I, we've talked about this for years and years and years and years. Just that, like the expedition, the exploration, the being willing to raise the money to get the ship to go off across the sea. Like it took what's the story? It took Christopher Columbus something like 10 years to raise the capital, and then the journey took like 6 months. It kind of goes to show that like the people willing to fund these things are always very narrow, and that's true seed investing.
Well, I agree. I mean, I think there's like two camps to this. One is like the missions that take a fuck ton of capital in a weird market, right? And that's actually not something that I do, but like that is that's very viable strategy.
And also, is AI going to change that? Or are there going to be fewer of those, or are they still? No. Okay, we're still going to need a lot of capital. Okay, just checking.
Yeah, defense is expensive. And then I think
anything with atoms is expensive, right? Like I'm working on an atom heavy project right now. I'm actually two of them. And so anything with atoms, you have to move atoms.
Dave, have you seen Oppenheimer yet?
No, I can't wait. I'm very excited.
Was that a great joke? Was that a great joke?
And then I think
great joke.
On the seed side, like, look, I mean, Dave, you're right. We were talking on the back channel about the fact that, like, when I look at the investments I've made that I'm most proud of, that I think either have returned a shitload of money or will, they're all super low valuation deals, right? Yep. And it's not just because that you get better multiples off that, obviously, if they work. The actual more important bit is the reason they're so cheap is because no one else wants to do them because they're too weird. And so
I thought it was interesting in the back channel that people were kind of like, really, Sam? Like, that's how you think about this? And I was sitting there reading the back channel going, yeah, that's why it's so cheap. Nobody else wants to do it. Like, that's the whole point. Yeah. Like, how did we lose the narrative on this over the last 10 years?
Well, it's because the investing model, like, it's way easier to just seek AUM and a cookie cutter model. Like, venture capital does not scale. That's just the honest reality of it, right? And so, like, it did scale. The factory was a beautiful 10 years of money making, right? Well,
low multiple money making.
Lower multiple.
Yeah.
Lower. Okay. So where does that, Sam, I'm going to give you the last word on this. So much money. Others didn't make money. So where does this leave venture? Seed is not dead, but it's fundamentally changed. It's going to be pushed to the fringes.
The version of seed we had in the last decade is over. The capital factory is over. Someone will claim it back in some way, shape, or form, but it is dead. Investing will still exist. There will still be seed investors. There will still be good seed opportunities. There's still stuff we like and look at. Like we intended to
come hang out with us in the weird promised land of strange ideas.
Okay, so let's put it to a more or less.
YC Demo Day. How about this? YC Demo Day is dead.
No, that died years ago. That's an easy one.
That's true.
What? So are you more or less seed investing?
Me?
Yeah, less. I suppose.
As a professional seed investor, I say I'm equal seed investing. I'm anti.
No, you have to make the unbiased.
I think we need a new name for it. I'm going back to Adventure Capital. I mean,
Adventure Capital. Yeah,
we had a sidecar fund in our last fund that we literally named Adventures, and so to me, it's like I'm back to Adventure Capital. We should write about the
naming of these funds. It's just absurd, but that's a different topic. Okay, so Dave, you're more Adventure Capital, less seed investing in the past 10 years.
Less what seed was for the last 10 years. Yeah, I mean, I just think that Sam's right on this.
I'm just going to say more uncharacteristic of myself. Didn't raise a dime of venture capital and would doubt I ever will. But I think there is going to be capital seeking interesting new things, and that this industry will survive and thrive in different forms. So I'm more on this one just to keep it interesting. And yeah.
We should just rename seed investing X investing. Then it will survive.
Totally. That makes so much sense.
X investing.
X Meta platform alphabet.
Heard it here first.
Let Musk
great.
sue us over that one.
Well, great to chat with you guys. We have a lot. Whoa, Sam, you were saying something?
Was it Microsoft or Facebook that has the patent for using the term X in a finance
Microsoft.
context? Oh, so Microsoft will sue us for X investing.
I don't think Microsoft's going to sue. Yeah, you never know. Maybe we'll sue them over OpenAI copyright things. It's a brand new game. We have information just broke a story that they hired a new OpenAI hired a new IP lawyer who used to work at Microsoft. So go figure that one out. Okay, gentlemen, on with your days. Go forth and invest, and we'll talk to you soon. Bye.
See you guys.
Bye.
If you enjoyed this show, please leave us a virtual high five by rating it and reviewing it on Apple Podcasts, Spotify, YouTube, or wherever you get your podcast. Find more information about each episode in the show notes and follow us on social media by searching for @MoreOrLess, @DaveMorin, @Lesson, @JLesson, and as for me, I'm @Brit. See you guys next time.